are live on the morning show. Good morning, everybody. Welcome. Spencer Israel, Steve Strazza. JC Parets is out on vacation this week. So here's what we've done. We've gone and we've acquired ourselves a special guest host. That's right, Grant Hawkridge, our chief Aussie operator on the morning show right now. It's going to be a good one. We have much to discuss, obviously. There's a lot that happened over the weekend. So let's get to it. We'll have Kenny Glick stop by. We'll have Todd Stone stop by. If he's feeling better, maybe Jason Purz will stop by. I don't know. It's going to be an adventure. So let's do this. If you're watching us on YouTube, give me a thumbs up, please, and thank you. And I got Strazza. I got Grant. I got you. Let's dance.
Hello.
Oh,
hello, everybody.
Who's that?
So good to see the one Grant Hawkridge here joining us today on the morning show. I think you've done this a couple times before,
I have.
Grant.
Yes. But it's good to be in the house.
It's not
good to be in the house.
Yeah, I know. Grant wakes up at tell people what time it is in Australia.
Right now it is 12:30 a.m.
So Grant stays up late to do the morning show into the wee hours of the night.
Yeah.
And we have a very special War Edition Strazza show today. So we're going to break it all down. I know some of the guys are making war charts right now, but we'll talk about it because obviously some big moves here today in both directions based on the headlines of the weekend. Spencer, do you want to give us a rundown?
Yeah, let's do that in a state of the markets type situation.
Mommy, come on.
Want to give a shout out to Jay Goldsmith, who won't miss the show even from a bomb shelter in Israel. All right, well, stay safe out there, Jay Goldsmith. Yeah, you guys know the story. You don't need me to tell you, right? Bombs are flying, missiles are flying, things are blowing up in several countries over the weekend. And here's where things stand. S&P futures down 1%, NASDAQ down 1.25%, Russell down about the same, small caps down about the same, 1% there. Crude oil up 8% this morning, gold up 3%. No one cares about crypto. Bitcoin, ETH might as well be flat. They are flat. Let's call it what it is. Most of the world trading down, right? Europe, Asia, down, dollar up. And that's the story, right? How did I do? That's pretty much where things stand. This morning, the big story is going to be oil, obviously. And yeah, we are.
I will miss JC pretending he doesn't know what's going on in the world. So I'll play that role today. Who's Kumemi? What did they do?
Yeah, apparently we got the big guy. The big guy, and things have been going on in Iran. I don't know if you've been following that, but there's been like mass protests going on in Iran. They turned off the internet there like a month ago. There's like crazy stuff's going on, like not good. Like seriously, not good.
They're killing their people.
Yeah, real bad stuff. So we got the head guy apparently, which is cool.
So we've demonstrated lately that we're pretty damn good at doing quickly and effectively to just take out
very effectively.
Got to be scary. You know, if you're like Vladimir Putin or this crazy guy from North Korea sitting here watching these things like in Venezuela and now Iran, you got to be wondering like, maybe we got to beef up our security or, but it's the tone at the top. So that's how you got to do things, I guess. We talked about on this show past couple of weeks that just based on the technicals, no war forecasts, that there was a huge catch-up opportunity between futures markets and energy and the stock market for energy stocks, right? Because energy stocks, if you look at something like XLE or the other indexes that came out of this massive rectangle pattern, enjoyed a really nice reaction leg higher, and then crude oil still kind of like hanging around the lower bounds of its range. And you would think, it's got to catch up there. And We didn't know it would be because of the war, but the charts were pretty clearly saying that. What do you think, Grant? Am I crazy? Can I tell the future?
Well, I actually put out a post this morning about oil stocks, the NYSE oil index, and there's 20 components in there, all the majors, all the goodies, and all of them are in uptrends. 200-day moving average, they're all above it. 150-day moving average, they're all above it. 100-day moving average, they're all above it. 50-day, they're all above it. There's a few, in the smaller time frames that there's, a few red cells I've put in there, but majority of them are in long-term primary uptrends and have been for a little while.
Yeah, no, it's a good point. The list of bad ones is short and getting shorter. Sure. And from a breadth perspective, right, like energy's become this area all year now where you can basically close your eyes and throw a dart at the, oil and gas industries, and anything will really work. How do you think about that from like a market internals or a breadth standpoint?
Well, with my trading, I follow the data, and AI stocks pulled back and people were like losing their minds. Portfolios were falling, and I was like, my portfolio is going to all-time highs because I'm following the data. I'm following I'm watching the relative strength move into energy stocks. I'm watching the relative strength move into material stocks. So I'm moving out of tech. I'm moving into oil stocks. And like I had Sam a couple months back going, you're holding too much tech. I was like, yeah, I am. But that's where the data is. That's what the data's telling me. I need to be holding tech. And then slowly I started buying industrials. I started buying energies. I started buying material names. Now I think I've got one technology name that's been good for me. So I'm keeping it. But majority of my portfolio now is, moved across to that. And you see that in the data. You see that in the breadth. You see that in the relative strength.
Grant, out of curiosity, when's the last time that happened for you?
Oh, I mean, tech's been a winner. I've been, you got to go back a couple of years now when energy was winning back then, and the data was telling us back then, a couple of years ago.
If I think back to 2021, it wasn't like this because oil and gas was working great, energy was working great, but tech and growth were working great also.
Yeah.
This is a little different where big cap tech continues to deteriorate. I mean, even last week, so. Another week of deterioration, right? Meanwhile, cyclical groups, value groups, maybe not all of them, right? We're losing financials in a way at the index level. But for the most part, all these new groups improving from a market internal standpoint.
Correct. And with that tech falling off a cliff, you're seeing that in the index, with the index going across sideways for the last month or so, 2 months. And because the names that are leading right now, the sectors that are leading right now, they've got no weight. They can't bully people around in the schoolyard, So, and that's what I'm seeing is people are missing that opportunity because they don't want to. They're looking at the index and they're making trades off the index, and the index has been going sideways, so they think it's not a market to be in, putting capital to work, essentially.
Why do you think these advanced decline lines remain so strong? What's driving
that? Because, underneath the hood, a lot of stocks are going up still. It's that mega cap growth names that are failing.
And I think the key word there is mega cap, because even down the cap scale, growth stocks aren't so bad. It's really just the big ones. Is that what you're seeing?
It's just the big ones. Yeah. Totally agree.
Flipping through some.
I mean, that's what the data's telling me. So I've got to follow the data. I mean, I'm very data driven in my approach.
So I asked you about 5 minutes ago, gave you a really nice heads up for some NASDAQ 100 breadth charts. And as I look through them now, live on the show, they look better than I thought they would look. I mean,
yeah.
I
there's new highs there, isn't there? There's new highs there, and there's not many new lows.
Less new lows than I would have guessed. Yeah.
I mean, and especially over the last couple, the last week and a half, 2 weeks, the new lows have started to disappear.
There's 1%. basically new lows across the board.
That's
If you want
even.
to put
Yeah.
the charts up so people could look at them while we're talking about them. You sure that's right? You sure that date is right?
Yeah. I was as shocked as you. Yeah, definitely. When you called me up and said, "Get me some of these Nasdaq 100 charts," and I was like, I mean, we're looking at the Nasdaq as a whole here. There are a few other Nasdaq 100 charts that I put in there, which I'm not sure that they're in the deck. I think they're slowly coming in. Yeah, slide 5 has the Nasdaq 100, and yeah,
like
it's
a good down open. Go ahead.
It's as we just said before, it's the mega cap names, it's the big boys that are weighing in on this index. If you're trading the index, you've been going sideways. But if you start going deeper into the names, and I mean, if you go into small caps and mid caps in the S&P, there's lots of names that are working right now, and that's where you find most of those energy companies is those small cap, mid cap sort of sizing. They don't those energy names don't normally creep into the larger cap scale.
No, still waiting.
Yeah, and they can't bully, and that's why the index is going sideways and has been for quite some time. And I'm sitting over in the corner saying we're still in a bull market. There's lots of things working. People are looking at me strange, but once again, I follow the data, and that's how I do it.
Can we do slide 3 here? Can we just look at the energy versus the S&P? I think we have it. There we go. Thank you. I mean, this is going to be the story of the week, right? Is energy markets are ground zero here. There's a lot of trades. There's a ton of trades to be made off of what's happening in the Middle East now, right? There's the defense trade. There is the dollar trade. There is international trade. There's you can drill down on the defense trade and say drone stocks or whatever defense manufacturers, whatever. But this is ground zero, is energy and oil right here, right now. What do you think?
I think that defense stocks are up about 150% over the course of the last 2 years. So, do you really run out and buy A&D stocks because of some war headline? We've seen this before. You're probably not catching a great entry.
But in energy though, in oil, we've been waiting. We've been sitting here waiting now for I don't know, the pejorative we've been waiting for oil to do something, and now it's started to go finally here in the last month.
No one's been waiting on oil and gas. We've been running huge portfolio overweights, breakout multiplier and other portfolios. I think we send a note every weekend showing our sector exposure. We're at 40% energy at the end of last week.
All right, so you haven't been waiting. That's
no
good.
one's been waiting. We've been talking on here. In fact, I think one day you really pissed me off because you said, "Oh, Strazza, you were early to energy," because I got there like 2 weeks early back in November, right? No one's been waiting, and if anything, like you said, we were a little early, Spencer.
Isn't it funny how I forget? JC said this to me, but I don't know if it was his quote or not. That news headlines, it probably wasn't, but news headlines tend to happen in the direction of the underlying trend, right? Or whatever the recent trend is. So
what we say is, Brian Shannon, we got this from Brian Shannon, reactions to both earnings and other news events tend to occur in the direction of the underlying trend. So
oil's had a pretty good couple of months, right? And now here you are this morning with this is going to be its best day in I don't know, a long time, right? I don't know exactly how long, but
this is
when you.
It's starting.
I was just going to say, like when you look at like major events like we have seen over the weekend. I mean, I haven't done the study, but I've seen the studies done on Twitter and stuff like that, and the stock market really doesn't care too much about major events. Like you go back in history, like 100 years, the stock market may drop for a week or 2, 3 weeks, month, but it picks up pretty quickly after that event. Once it's all settled, once the hype of what's happened has died off.
If you look ahead 52 weeks, then the market is almost always higher.
I think if you look ahead a month, you'd be surprised.
Okay,
Grant, run those. I think.
Yeah.
Look, you get the knee jerk, right? You get the panic sell off, which we saw. Even it happened last night. Futures opened down like 1.5%, and then they rallied back to almost flat, and then they're selling again. I wouldn't be surprised if by the end of the day or by tomorrow, the major averages at least look fine again. And we're only down 1% here this morning. S&P's down 1% right now.
I mean, I have the bonus of being in an Australian time zone, so I get to watch the futures the whole day, and they're off their lows. I mean, like I flicked on my phone, and I saw the S&P was down, 2.5%. I was like, oh, it's going to be a tough day. I open it up a couple of hours later, it's only down 1%. I was like, the hype is already sort of disappearing, I guess.
Here, I'll give, if you're looking for a broad risk management level, we don't have this chart, but anybody could follow along at home. Since second week of January, we've seen 1, 2, 3, and now today will be the 4th test of a very clear tactical support line at 677. You could call it like a tiny little neckline of a little distribution pattern, a 2-month distribution pattern. If that level goes, I think you'll see some downside follow through. But if you see the S&P dig in here again, the same place it already has 3 times this year, most things are probably okay. And here's another thing, right? We come in 1% down open. Everybody's, panicking about war, stocks are down. Today's action, not at all unusual compared to what we've been seeing and what's been a choppy, messy market full of false starts, breakouts failing right in the biggest stocks. It's been a slop fest. We've had down 1% days over and over and over again since late last year, really since September of last year. So to me, the price action, if you turned off all the news and had no idea, if you're living in a cave and had no idea what was going on, I would have come to my desk this morning and said, yeah, this is the market we've been in. Oh, and energy's up big again? Yeah, that's the market we've been in.
Really? The VIX is up 17% this morning? And this is the market we've been in?
Yeah, that's the market we've been in.
That's the market we've been in, definitely.
Yeah, the VIX was elevated late last year too. We're not even close to the November levels. Not even close.
Okay. I mean, how high did we get? We got to 28 in November, and we're at 23 right now.
There you go.
All right.
Don't be scared of the war, Spencer.
I'm not scared of the war.
Beautiful.
I was the one last week saying oil is going to go up if shit hits the fan. And JC's like, no, it won't.
We bought, yeah, you're right. Yeah. Yeah, you usually get that. We bought some Palantir calls last week. Not because of war. It's because Palantir's been absolutely thrown out with all the bad software and bad tech names. And they're like, hey, you got to get a bounce here. Now you're getting a little defense pop today in all these names. And I'll tell you too, software, let's see if the software stocks, the worst stocks in the market, make a new low today. Let's see. I'd be very interested in what goes on there. Because they're not making new lows right now. They're actually just sitting around same place they were to close out the week. Right? If this was really like hardcore bear market, sell-off is accelerating kind of stuff, they're going to take the worst stocks and hose them down another 5-10%. You're not seeing that this morning.
That's a good point, right?
Yeah. The good ones are holding up, and the bad ones look to be holding up too. So I don't think there's any reason to panic here. We could do markets and turmoil special later if you'd like. I'll join you.
For now, that's a great point. That being said, it's 8:52 on a Monday morning, the first day after this whole thing started.
Look,
so
things could get worse, right? I mean, anything. Here's
yeah. So okay, wait. I like what you just said. So basically, your like glaring like danger signal will be if software falls out of bed again and makes new lows, because that means they're throwing it out. I mean, yeah, they've been the worst, but that means there's more pain to come, right?
I would watch that top in financials. That I don't like, right? And then that little tactical level I'm saying in S&P, if they can't take that out, there's really not much going on. Financials are going through their private equity thing, right? Which is even tied to the software weakness. It's all a part of that AI overbuild narrative. So that's kind of been going on and is separate from the war stuff. Let's see if they can take down the worst ones, and let's see if they could take down some of the ones that haven't been taken down. I think S&P digging in at these lows again would make sense. However, could another headline come out that the war activities are getting more, scarier, right? And then you see maybe further selling. Sure, from what I'm hearing, this is kind of just starting, not ending, right? So we got to see where it goes.
Yeah,
we'll let the data decide what we're doing at the end of the day.
I want to see Grant's charts. That's what I want to see.
Grant, do you want to bring up the bull market checklist?
Talk to me about a little checklist.
Yeah, sure.
Right?
All right, by the way, this is the checklist.
Bull market checklist.
Grant puts
do we have
this
a
out.
Do we have a bumper, Spencer?
No, we don't. Grant puts this out every Monday, so it's nice that he's on the show today. And it goes to everyone that gets his daily newsletter, which if you don't get the daily number, I'll put the link up on the screen right now. And I highly recommend the daily number. And every Monday's edition includes a link to Grant's bull market checklist, which it tells me basically how to feel. Where's the fear meter? And the fear meter is not very high right now, according to Grant.
Not very high in my books. No. So I guess I'll break it down really quickly for you, everyone that's tuning in here. We
like to see green on the screen, Grant. Here, this is bullish. Green is for bullish.
This is very bullish. Is very bullish. It's 8 out of 8. Everything's ticked off. So essentially, every Monday I wake up and. So every Monday I wake up and just ask myself that question: am I allocating capital to the market or am I not? And this is where I start first every day. Every Monday I start. Check this out, and I run through and just look at all. Essentially, these are all the things that I like to look at that make me feel good that I've got a tailwind at my back. So. That's the first thing I need to ask myself. Am I allocating capital this week or am I not? And am I doing it with a tailwind or a headwind? Yeah. So essentially we're 8 out of 8. And this bull market checklist of mine has been 8 out of 8. At the bottom there, you can see for the last, 2 months, it's been 8 out of 8. And you go back even further, the lowest it got was down to 6. You go back, I think that was about when we came out of that April low, when we the low in the S&P. So we saw that breakout back above those February highs. It's been 8 out of 8, 7 out of 8, 6 out of 8 at worst. So these are the things that I like to look at is in my trading, and it's a selfish endeavor essentially. So I'm looking at breadth, I'm looking at sentiment, I'm looking at liquidity. The things that I want me personally to see happening in the market.
I want to run down each item. All right. So let's take it from the top. Breakout level. What are we doing here?
Yeah, so that's just that's a movable, that's a discretionary level that I put in there. It probably needs to start moving up, but there hasn't been really a level since that sort of February high, because the stock market's just been going up until now. You're seeing that sideways consolidation in the S&P. So you could probably, I've been umming and ahhing about moving it up to that sort of bottom of that range, but I'm still going to just leave it at the February high. So it's just a discretionary level that I want to see prices above, essentially.
I think
the next one is
another good level, Grant, that you might even want to use when you update that. Instead of going to that tactical level I called out, you got the big sell-off in October and November of last year around 653. When I'm looking at this chart of S&P and I'm thinking, okay, if the little tactical level of 676 breaks, that's probably where we're headed. It's only about 4% lower from here, though.
Yeah, so...
All right, next one.
I just want to see what the trend of the market's doing. Is it going up or down? And the S&P's trend has been going up for 207 consecutive days. I mean, if you just look at that's the slope of the 200-day line. If you just look at price above the actual average, the 200-day average, it's been 202 days. So it sounds like a lot of days above the 200-day average, but if you go to slide 13, you can see that it isn't excessive right now. There's a lot of times that we've seen trends go a lot higher than what we're currently sitting in at the moment. So I'm not scared of hearing 200 days above the 200-day moving average, because there's been a lot of other times going back to the 1950s where the trend goes, 500 plus days above it. So that's I want to see that the primary trend is up. I want to be part of it. I want to be allocating the capital when the primary trend's up. And when it drops below, then obviously you're going to see a lot of the other things being falling off that checklist as well. So if we go back to the checklist, the next one is I'm just using sort of an RSI momentum. I just want to see the momentum. Go back to the checklist. I don't actually have a chart of the momentum one there. So currently the RSI, daily RSI is at 48. It hasn't gone below 30. I mean, it hasn't even gone below 40 for quite some time. So that hasn't switched. That's still in a bullish regime in my books. For it to switch, it needs to drop below 30.
Yeah.
In normal bull markets, you're sort of seeing a bid getting catched around 40, which it has recently. So yes, that's close, but it's still green. It's still a bullish regime for me. Momentum.
And it has been, right? The momentum's been sleepy. It's been waning. But to Grant's point, it's not getting oversold. It hasn't been oversold literally since the tariff war fears from this time last year. The way we do the bullish momentum regime is simple. In bull markets, we expect momentum to get overbought and not get oversold. That's a bullish regime. In bear markets, we expect momentum to get oversold and then not get overbought. And right now, while you haven't gotten an overbought reading really since summer of last year, we haven't gotten anywhere near oversold either on the dips.
All right, I want to pause that for a second, and we'll come back to the non-index portion of the checklist in a moment. But we have Kenny Glick in the house. Kenny was out in Vegas all week. He's back now, and he's itching to get some trades off. So Kenny, I'm bringing you out, and then we'll talk to Todd Zone, and then we'll get back to the checklist. How's that sound?
I think you could feed some ducks. I think you could feed some ducks in oil. I think you could feed some ducks. Oh, you could always feed the ducks.
They love bread.
You could always feed the ducks.
Woo! It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 problems, and I still kept it 100. Hola. Yeah.
All right. Kenny's camera is off and his microphone is off. There he is. There he is.
I'm too busy dancing around the room.
What's going on?
Chilling, What's up?
I don't know. You tell me. This is like classic Kenny territory where like shit hits the fan and then you're like there to trade it. So what are you doing this morning?
Today I was just giving a soliloquy about the market manipulation on Friday, how I almost guaranteed we'd be gapping down because it was virtually impossible to make money as a shorter again on Friday. I was really looking forward to it, and we lost on it. And I was like, whatever they're going to have to do, the market's gapping down on Monday. They had to throw a war at the market. But, we were just talking about how even the moments like this, it's still going to be probably difficult to hold a short. And about 20 minutes ago, the NQ futures provided a long trade. Now that's over. So we've been talking about the differences between day trading, swing trading, and investing, because a lot of commentary lends into the idea of longer time frames. For the day trader, when we get paid, that's it. Sometimes that trade, you got paid for the 20 minutes. That's it. So if you didn't hear, this trade that we have that works every time, it worked 2 times on Friday, but the one that didn't work turned into a disaster. But the stop was a 40-cent stop. The stock wound up going down, and then we're talking about the figure trade. What's up if you took that? And that's why this is the most important conversation I'm having this morning with everybody, that when there's a trade that's a loss, you got to take the loss. Read those Jesse Livermore books. Go watch the video. Trading involves loss, and disaster is a mistake. When you have a trade that you can lose 40 cents on and later that day it's down 4 points, is that the stock's fault, the trade's fault, or your fault? It's your fault. You got to own that. You got to take that loss when the market tells you to take that loss. So that's where we're at today. We're just going over it because we've got a lot of new friends in the room. Thanks for taking the class. A lot of my Las Vegas friends for showing up. My TikTok.
Yeah. How was Vegas? Tell us what was the sentiment there? All good?
Yeah, it was actually a pretty good show. We had a packed house. It looked like it was going to be like 8 people listening to me, and suddenly 120 people rolled in. Rang the bell. We did everything. It was just like a hit the bid show. So very good. You know, I had some fun with it, and then we just crunched charts, and I just took quotes from the audience, and the VWAP couldn't be stopped. So it was a lot of fun. We had a good time.
All right. Are you up on a Sunday night like last night checking the futures after a weekend where there's bombs and missiles and stuff?
And obviously, and of course, it was a long first because you got the little dip. You had a 100-point move, and then that rolled over, and that created our sell-off into the open that we're in right now. We just tried to fight back. I still think, obviously, we're going lower, and here's how you're going to gauge it. Right now, UVXY broke last month's highs.
There it is.
If they're above 44.79, there will be no rally today.
Okay.
So if you break the overnight highs on UVXY, we are in deep doo-doo. Okay, my friends? And we got at least another 10 points to the downside on the Qs, and we'll see where we go from there. So that's the watch list. If anybody's looking for a watch list today, it's the Qs, it's UVXY. Some of the defense stocks, I am actually looking at the oil and energy stocks. Rig's been really kind to us, but we're sticking with the Qs, UVXY, and
right.
some energy and oil right now. But if this is your first day here, your first week here, strap in. We got some volatility, baby.
All right. You too can trade along with Kenny every day. Go to hitthebid.com.
Strazza.
Kenny, the people miss you when you're gone. You know that?
They did. They missed you. They definitely missed you. Yeah.
I've been talking about you all week. Where's Kenny? Is he okay? He's out in Vegas. I almost texted you to make sure you're okay. Everybody's like, where's Kenny?
We didn't know. We didn't know.
The healthiest I've ever came back from Vegas. So it was actually
You look great. You look like you were not just in Vegas for that long.
Yeah.
It's a long time to be in Vegas, man.
I actually slept well. I don't remember getting back to the room each night, but I slept well. So
okay, good.
I'm going at the end of the month. I'm going to text you for tips. I haven't been in 10 years, at least.
It's called the Electric Mushroom, which was all Latin house. I was at least, what was the over-under on people who called me Pitbull that night? So, but I like it. Let's go. Let's go. Right. I'm on the dance floor. Let's go. Latin house night.
All right. Good luck, Kenny. See you
later.
All right. Kenny, Kenny is proof that there are instruments for everyone and everything. If you ever wondered who the hell actually trades as UVXY, Kenny uses the UVXY all the time.
Loves it
as his indicator for Grant's got his bull market checklist. Kenny has UVXY, right? UVXY goes up, Kenny's looking to short, right? And vice versa. So these
simple
instruments
and it works,
these instruments exist for a reason. So speaking of exchange traded products like UVXY, we do have Mr. Todd Sohn in the house, and I did add his charts to the end of our deck here.
That was a sick transition, Spencer.
What?
That was a sick transition.
Oh, thank you. I do wonder if people like Todd are ever like, who the hell actually trades his UVXY crap? But it has a purpose. Everything has a purpose. Todd says degens. Okay, well, there you go. There's your answer. Right?
Bring him out.
Yeah.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Sohn.
What's up there?
Have you ever thought that about the UVXY? Being like, I wonder who actually uses it.
It's degenerates.
Yeah. Okay.
Lotto ticket players.
Or it's an indicator for bearishness, right? And fear.
Yeah. I mean, I have other vehicles that if I'm trying to play tail risk that I would use.
Okay.
Like tail. Cambria is fun.
Tails out there. CAOS. That's the one I tell folks a lot.
Aren't a lot of these just long treasury kind of strategies, and that wouldn't be working today though?
Long vol, right?
Okay.
I guess, I mean, maybe some. Well, the UVXY is going to be long vol. The tail risk, they're buying puts.
They are.
Puts. Yeah. I mean, maybe there's treasuries in there. I'd have to look at it, but it's usually puts deep out of the money puts or something like that.
Is it
So
is it
they'll pay
strange?
off.
Is it strange that bonds are down today?
Bonds haven't done anything in years.
Right.
Right? I don't think there's any change there. You're talking about the 10-year, right?
10-year just digging in at a big level. If you
Yeah.
look at the chart, you're just like, yeah, okay, it's just digging in at the lows.
There has been nothing to do there for ages. So I got nothing, you know.
Will I see you in Miami next week?
No, well, I was just there. I was on family vacation. I thought about texting you, but I just didn't have enough time. My bad.
You didn't have time for me. That's so nice.
We were there on family vacation, and then I went to Orlando because I got stuck from the snowstorm here.
Wait, Todd, speaking of travel, you're going to my old stomping grounds tomorrow. You're going to Detroit, right?
Tonight?
Tonight?
Tomorrow, yeah. I'll be going to Detroit later today.
All right.
For a little,
don't say I didn't try to help you. I gave you several good.
I'm staying in Dearborn. Is what I've.
Okay, you didn't say that. Now I know.
I had no idea.
I would give you some recs for Dearborn. Say less. I got you covered.
I had no idea where I was going. I'm staying in Dearborn, and
I got you covered.
Bloomfield Hills.
I hope you're ready for some Middle Eastern food because that's all they got there. So,
really?
That's all they got.
They have some good gyros.
Oh yeah.
Really?
Nice. Let's talk about ETF inflows. People are net buyers. Surprise, surprise. Todd, how bad could things be if money keeps pouring into equity ETFs? How bad could they be?
They always take in money, right?
Oh, okay.
That's just the straight. So there's two different ways to look at it. There's just the pace and intensity is really high. That's what happens when you have these massive bull markets. But then it's also a structural movement. People are coming out of mutual funds into ETFs at a very rapid pace.
Yeah.
So the flows are just going to keep getting wilder and wilder. I get more good information when I start to see it more at the category and sector level, because I think that's when you're going to get more tactical posturing, as opposed to just a very high level, for what that's worth.
So it's the industrials is what jumps out to you then.
Yeah. So here's a chart of just the broad equity ETF flows. We just finished February. You did $6 billion per day. People are just pouring money into stocks, all different kinds of exposures. The one that really stands out to me, though, is the industrial sector right now. So you have mega cap heavyweights correcting, consolidating, whatever you want to call it. And so you're seeing investors move away from that kind of exposure and really getting into industrials. And this is going to be the broad stuff, defense, and transportation.
Yeah. Wait, Todd, real fast. Can you just turn your speakers down because we're hearing you. We're hearing your echo.
My speaker. Okay.
You have your speakers on.
Is that better?
Yes.
Better?
Thank you.
Okay. There we go.
Are you seeing the same sort of flows into energy and materials?
So yes. So materials, not necessarily just the spider, but more the minings, the metal miners, right? Copper miners, silver miners, gold miners. Big money going there.
Next slide, please.
And then energy. Here's the interesting part about energy. Big chase, right? You're talking about a sector that's been dormant for 3 to 4 years, right? Finally starting to work. Now you have these events that have happened over the weekend that have been building. There's been a pretty good move into energy over recent months. But if I zoom out, if I go over the trailing year, if I go over the trailing 3 or 4 years, it's been a complete kind of desolation from energy. So I think there's near-term risk because these things are so overbought. No doubt about that. But thinking bigger picture, no one's really there, right? So I think you have to take a little bit of a time frame stance on energy, right? Exxon has been massively overbought now. But when you zoom out, it's the same idea. Nobody's been in energy for years, and now it's finally starting to work. So I'm more concerned about the industrials, though, because they're kind of at the center of this whole, or maybe adjacent to this whole AI story, right? The power generation, those have been very popular, and of course, defense too.
I have to say, I wouldn't have expected industrials to have more inflows than tech ever. Yeah. Really,
tech was persistent. That's going to be your broad, and then the semis too. I mean, the semis are still doing whatever they're doing, but that just shows you how enthusiastic folks are about industrials right now. That there's more money going there than tech. You know what I mean?
And then
So
when was it silver? The silver peak it was only like a month ago. I was going to say I'm surprised to see materials, but that was the blow off didn't really happen until the end of January. So I would expect if we look at this chart in 30 days, that materials that blue line for materials, I wouldn't expect to be nearly as high.
Yeah, we'll see. Yeah, time will help roll that off.
Yeah.
But that's there's been a lot of money into the metal and mining type fund, the equity funds, not necessarily the physical commodities.
Right.
And then the one that stands out to me is healthcare. Because healthcare is working.
Yeah.
We're very bullish healthcare, and it's kind of middle of the pack. So I like that.
Big breakout.
Yeah.
Big stick Friday. Todd, how about when you look at the industry group flows, like what's going on with software and semiconductors? Because I know when you look under the hood in tech, there's two very different stories.
The tricky part with software is there's only like a small handful of software specific ETFs.
Yeah.
Right.
What do you use? IGV, right? You got to go with IGV.
XSW, AOT is another one. That's a newer one.
Yep.
There might be like 2 or 3 others. I can't remember off the top of my head. So you're seeing money going back into there. People are trying to probably bottom fish, or maybe they were shorting on the way down.
Yep.
I don't know if I have much info on the software part of it. There's still money piling into semis though. So I think that's the risk.
Incredible. So that hasn't slowed down at all.
Not necessarily, no.
Wow.
And I think that's the risk. Like the semis, on most part, are still very overbought in the long run.
Yeah.
So there's corrective risk there, and you're seeing it across some of these other high flyers. Are the semis next? I think that's very big. I think there's risk for high beta.
I don't know if I love this setup in semiconductors, where the strength beneath the surface is solid, like you said, fund flows, still seeing money come in. But then you look at the biggest, best names in the space, the leaders, and boy, Broadcom, Nvidia, you could start drawing these like some nasty distribution patterns. So what if you lose the best ones and all this is going on? It's mixed signals for me.
The what is it? I'm looking at like Micron.
Micron looks great. The memory stuff. I mean,
so like, is there a risk to that? Right.
I would say
Applied materials. I think that's what I'm kind of paying attention to here. Sweet cat. Who's that? What's that cat there?
Yeah, it's my sexy office cat.
I didn't know we had a cat.
That's Lola.
She's the official mascot of the morning show. Yeah. Hey, we have a bubble chart alert. Can we bring up the bubble chart? This is great. This is showing the drawdowns, the max drawdowns, right, of levered long single stock funds. I have to admit, Todd, based on my perception of these funds, this is a far more even distribution than I would have guessed. I would love to know who is on the top right there. Which of these don't have drawdowns at all, because my perception is that they would all be 40, 50, 60, 70, 80% off their highs, and that is not the case apparently.
I was just messing around with some data. I'm like, what if I just put this on a scatter plot? Because if as much as stuff like the semis are still kind of near their highs, all these other stupid stocks that have leverage on them are getting smoked.
Yeah.
Right. And a very crypto related stuff too, like Gemini, Bullish, eToro. Those all have levered products.
Great.
MicroStrategy, whatever the hell it's called now.
It's amazing. Nobody even wants the common stock, but you can buy it 2x.
Yeah. And look at these drawdowns. They're all down. And some of these, I don't have it in here, I think. I have a table that shows you the inception date of some of these. And these 2x funds, they launched probably in 3Q or 4Q 2025, and they just went straight down, straight to zero. So I don't, this is more just fun with data, but I think if you're messing around with stocks down the cap scale, and all of a sudden there's a press release that says XYZ issuer brings 2x precision to Strazza stock, I would probably sell the stock, because that means retail's onto it, the issuers are onto it, and it's time to move on.
Well, but also to your point, no one's going to launch a 2 times levered fund on like Boeing, right? It's going to be it's going to be Rigetti. It's going to be
the Rigetti ones are out there. Boeing
Right.
actually, I think there is one.
There is one of Boeing.
I'm pretty sure there's a 2x Boeing.
Oh my gosh. Okay.
No, there's not.
There can't be.
No, there's not. Stop it.
Does this one still exist? I don't
Stop
know.
it. That's a real stock, Todd.
Oh, it's there was one.
There was
BAT.
one.
Nobody wanted it.
Wow.
It was
All
1
right.
1/4. It wasn't 2x.
Oh, all right. I'll take it. Anyway, but to your point though, it's going to be the high beta names. It's not going to be like the real.
Yeah.
Yeah.
I mean, there is a 2x Exxon, I'm pretty sure, and Philip Morris and stuff like that, or there was. But it's mostly the stuff you find on like Reddit and Discord, way down the cap scale.
Oh, there is an Exxon, XOMX.
Wow.
Yeah. There's gonna be one for every stock out there.
The more
Most
you
of them
know.
are high beta, and it's just these things are just like, look at GEMG.
What is it?
I don't even know what GEMI is.
GEMG. That's the Winklevi.
Oh, that's what that is? That's Gemini?
Yeah.
Oh, the space station, right. They did a great job here. Great name. It's a great name.
GEMG. Yeah. Okay.
But anyway, it launches November 2025, and it just goes straight down.
Yeah.
Yeah, 6% drawdown.
That'll happen.
Like, these things are just they're fun to talk about. I feel bad for anyone who's actually long them, but there's all this stupidity that's going on, and I love when like the press releases come out.
Well, look, if there's a market for it, then great. If there isn't, then also great, right? Because the market will decide whether or not there's room or not.
So if we ever have a prolonged correction, a lot of that will go away, and then you'll be left with the Nvidia, Tesla, Robinhood, Coinbase type stuff left. That'll be what's left. All these fringe names that are 1 billion market caps and under will be gone.
Wait, can we do slide 29? This is talk to us about this. The private credit trade in public markets.
Oh,
so I didn't realize that we had this option available.
So if you look at, and listen, we're all looking at the same stuff, everyone in this room. If you look at investment grade corporate spreads, okay, they've widened out, but they're still historically low. High yield spreads have widened out, they're historically low. There's always a conversation of how much do private markets skew that spread. So what I like to do then is go look at some of the other exposures in the ETF world. There are bank loan ETFs like the two we show here. There are BBB CLO funds. There are CCC corporate debt funds, and all of them have started to change course in terms of their performance. They're seeing discounts to their NAV. They're starting to see outflows, and they're starting to see their spreads that they trade at widen out. So that suggests to me that there's some stress building here. Now, these are only small, very small drawdowns. But I think if you need to do a little bit more than just look at, say, the U.S. corporate spread market, right? Because I think things are a little bit more nuanced and complicated today. So this is just interesting to me. This is exhibiting some stress in terms of maybe what's happening in private credit and being exhibited through bank loans. I would just throw it out there. Like, so if you see someone say, hey, credit spreads are fine, yes, they look fine, but look at some of these other ways around, and the linear returns that we've been used to are not there. They've stalled out. I would look at XCCC. That's CCC rated corporate debt. That one's also kind of stalled out here. So it's just suggested that risk is coming out of the credit market. I think that's pretty interesting. I don't want to like become too bearish, but things are a little bit more nuanced than just looking at corporate or high yield spreads by themselves.
But even credit spreads are at their highest level since like November.
Yeah. No, they are definitely widening out.
Yeah.
If you went out to like a 10-year chart, it's like, oh, it looks like a blip.
Yes.
But you're seeing it in some of these other fringe areas, which I think is super interesting. Like, this is where some of these more exotic exposure come in handy, and knowing what's out there and what's available and how to kind of analyze it.
But but this is information. That's all this is, right?
It's totally information. Like, do I know the loan market or the CLO market? No, I'm not a portfolio manager of that, but I know what to look for. I see discounts happening. I see outflows happening. I see spreads, the bid-ask spreads on them widening out. That tells me that there's some stress going on there.
I enjoy the irony of the situation where just as Larry Fink and friends are doing their world tour trying to convince the investing world that every retail investor needs to have some sort of exposure to private credit and private equity in their portfolios, these things are blowing up as that's going on. It's just great to see.
Anytime you see the word, and this goes to leverage too, by the way, democratize.
I knew that was coming. Yeah.
I think we've probably talked about this before.
And
just run.
What they mean is we're going to screw you.
Yeah. We're going to democratize private assets.
We're going to democratize access. Yeah.
We're going to democratize.
We don't want it anymore.
We're going to democratize access to leverage on retail stocks.
Yeah.
For everything. Whatever the institutions had access to before, we're going to give it to you.
I would just run so far away. And you've seen in some example, the one out there with the SpaceX and exposure, XOVR, it's a freaking disaster.
Oh, I thought you were going to say DXYZ. That too.
Oh, yeah, that one also. Yeah, no, XOVR, a ETF that has SpaceX exposure. Plenty's been written about it. Morningstar's done some great work on it, and it's a disaster about what's going on there. People aren't getting the valuation gain on SpaceX. The exposure to it has gone up to about half of the friggin' fund now, which is technically illegal.
Great.
It's a mess. So
great.
Whenever you see the word democratize, we're going to democratize, prediction markets. I don't know. Skeptical.
That's code for. Hey, aren't we getting prediction market ETFs? We are. I saw some filings.
Well, there's a bunch that have been filed. They need to be approved. I mean, it'll be fun. I just don't know what kind of toothpaste you're letting out here. Like we're gonna be doing what shirt is Steve wearing on Monday in an ETF?
Travis Matthews.
I just assumed it would be like you're getting exposure to the fees that they collect. No, okay, I don't know.
It's prediction markets in an ETF, so I mean it's super interesting. Like this is how you kind of push the envelope forward. I just don't know how wild it gets. Like for elections, that's easy to do because it's once every 2 to 4 years.
Yeah.
But now you're gonna talk like Super Bowl? I don't know.
Yeah, there won't be any liquidity anyway, so who cares? Okay. Todd Sohn, friend of the show. We appreciate you coming on as always. Enjoy the great state of Michigan, and we will talk to you again in a few weeks.
I appreciate you all. Send me some food recommendations at the airport.
Yeah, I got you. I got you.
I'll miss you next week, Todd. I'm really bummed. Bye. Just to address something in the chat here. The purchases in private equity haven't been pathetic. You saw the KKR guys come out. 2 of the officers over there bought over $30 million worth of shares last week or the week before. So you're seeing some size, not piker purchases, but you're seeing at least some of these private equity companies. They are coming out and they're buying very, very significant amounts of stock on the open market.
It's what you want to see. All right, let's go back to the checklist, please. Slide 12. If you were paying attention to the first half of Grant's checklist, maybe you were saying, Grant, you're looking at the index. The index is flawed. Okay, the index is broken, and it's too top heavy. This checklist is not telling the real story. Grant, answer them.
That's why you got to use breath.
Okay.
That's why I use breath. Definitely. It's a key component of my process is looking under the hood, because the index can lie to you if you just got to peek under there and start counting the stocks. I mean, JC taught me that one back in the day. Just go back and count all the stocks. Go look at them all. So that's why I started digging into breath and utilizing breath so heavily in my process. And it's found wonders for me, counting the stocks, looking at all the stocks, different ways of visualizing it as well. Like there's, new highs, moving averages, overbought readings, oversold readings. There's lots of different ways you can do breadth. But the one that I focus on is we've done some studies on it in the past. It's the graph founded, I guess, this one. And I've leaned in quite heavily into this 20-day new high of the S&P 500. So it needs to surpass 55%. And that is what is classified as a breadth thrust. Everyone's got their own breadth thrust that's named after themselves. But I'm in the process of making my own, actually. So joining everyone. So this one, the data's
You
just
don't need any more.
Yeah, the data that I get from this when I go through and look, what the data's telling me from when stocks hit 55%, the forward returns are fantastic. When you sometimes we've had this discussion, Steve, is 54 good enough? In this case, it actually isn't, because there actually has been some cases where it's hit 53, 52, and the forward returns are terrible if it's outside that regime. So when the thrust hits, essentially, when we pass 55, we go into a breadth thrust regime, and that lasts 252 days.
So aren't we a little long in the tooth then? If the last thrust was May of last year, we're pretty much getting there, right? We need another one.
There.
We need another one.
We need another one, which is funny because that sort of Q2, when Q2 starts, we're going to start seeing, when you look at cycle work, that also shows weakness. So there's a lot of things that are actually teeing up to Q2 to show some weakness. So, but right now, the bull market checklist says 8 of 8. We're good, to confirm bull market. So, but I am cautious of the future because there are a lot of things when you look out that there's some things happening underneath the hood.
Are any of these items, in your opinion, at risk of flipping? Like, I see you're noting that the risk regime is deteriorating, and so is the global participation. Like, are those close to flipping and no longer being green on the screen here?
I would say that the risk on, risk off indicator is probably the closest, and that's come off quite heavily. I think I did chuck that chart in. Yeah, so throw up slide 15, it is. So you can see the pullback that it's had of recent. So that is caught my eye. That's pulling back quite quickly.
Yep.
So essentially this indicator has 19 risk ratios behind it, like high beta versus low vol, staples versus, discretionary. So there's 19 behind it. Bit of math, you produce this indicator. So if it's above pretty much 0, it means risk on is winning. If it's below that sort of red line there, risk off is winning. So we want it to be above that green line. As you can see, over the last, 12 months, it's been above the green line. So which marries to everything else that I've been seeing. It's been a risk-on environment. So, lean into it, essentially. So this has caught my eye. This pullback of the last couple of weeks of it just keeps falling. It's falling fast, but it's not like dropping off a cliff.
Yeah.
Right.
But it's got my eye, essentially. So that's probably the closest one to flipping.
Yeah.
If you go back to the checklist, I think there's like global participation, the bottom one on the checklist. It's still at 80%. Like there's 80% of markets around the world that are still above their 50-day moving average. When you go back and do the data on it, you want it to be above that 60% level. So that's healthy. If you go to the core market model, which it's got a mix of a lot of, it's a bit fancy to be honest, but it's got a lot of liquidity, sentiment, and breadth combined into one to produce one line. So it's a composite essentially, but there's a lot going on. It's probably not the time or place to break that one down, but that's starting to roll over as well. So there are concerns. Right now, it's still a bull market. The market, the data is still telling me that, we've got 8 of 8. So that's telling me everything's working. There are areas, though, of concern and that we need to keep our eyes on. And this is why I do the checklist, because I will start to see these green boxes start flashing yellow. Like you'll start seeing them creep in slowly.
Right.
And if you want, sign up to the daily number, and you'll get it every Monday morning. First thing you wake up, you're gonna have this in your inbox, and it's gonna tell you a lot of information is in this. And I actually produce a report as well, so I break down every chart that's in there.
Grant is breathing hot breath fire every morning, delivered straight to your inbox. If you're not on this list, you're crazy. This is one of my favorite notes to go through on a day-to-day basis. So make sure you signed up for Grant's
Yeah,
Day.
it hits your inbox at like 5 a.m. usually, right? Eastern time.
Yeah.
We're on
So,
Australia time.
right now.
Yeah.
We cook to order. My quant cooks to order. So.
That's right. All right, Grant. Fun fact about Grant. Grant is going to be doing a new show with us here live on the channel. We're going to be doing it. Grant's going to go live in the evenings. We're thinking Monday nights going forward. And it's just going to be, if you just can't get enough of Grant's charts, or his way of looking at breadth or his analysis, he's going live. I think we'll do like a practice run, Grant, this week, and then we'll start it for real next Monday. Yeah. Right. So we'll talk more about that. But if you want more Grant in your life, you can get more Grant in your life.
You probably need more Grant.
Come join me.
You need more Grant in your life. So that's exciting. Speaking of shows, it is Monday. Every Monday we do a show called Chart Request Live. You have a ticket request, email your request to us. And today is Rick and Sam, and they will answer your questions live on Chart Request Live. Just email the email address that's on the screen, and the guys will answer you on the show live at 1 o'clock Eastern time. That's what we got going on today. Plus Kenny is live at 11. It is 9:35. The markets are open. Let's get out of here so we can all go make some money. Thank you, Grant, for joining us. It's always a pleasure. Will we see you in Nashville in a few months?
Yep.
Excellent.
I'll be there.
Excellent.
I'll be there.
All right. This is good. Everyone, go make some money, all right?
Run it.